Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Axon reported another great quarter this week, and the stock actually didn't react all that much, which I think is interesting because there's such high expectations for the company already that even a phenomenal quarter is just not going to be that exciting for a lot of investors. Now, I don't do a lot of videos on Axon, but this is one of my largest holdings in a company that I've held for a very long time. So I want to get into the results and the momentum that we're seeing and then the potential upside in both new products and then new markets. I think that's where a lot of the growth is going to be for Axon in the future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Don't forget to check out this video's sponsor, The Motley Fool. Go to fool.com/ASYM for their top 10 stocks to buy right now. And I want to just start with a quick overview of the financial results. I'm going to do this segment by segment because I think that is the right way to look at Axon. The taser business is very different than the sensors and software business. But you can see here, cloud services continues to be just an absolute juggernaut, year-over-year growth, 54.5%, and gross margins were 72.4%. Just crazy numbers there, especially if you've been watching this company for a long time. There was a period of time where it was questionable whether they were going to see any traction with this business, but obviously they have sensors and other, this would be body cameras, the actual hardware that they're selling, 44.9% growth. Those are often tied together, the cloud services and sensors. So that's the reason that you see their growth rates being relatively similar. And I'll get to the way that they're bundling these together. Gross margin, not as high, not going to be as high in hardware, but 45.2% is really, really good for hardware sales. Tasers, this is the legacy business for Axon and still very big and very profitable. $163 million in revenue, up 12.2% year over year, and a gross margin of 62.5%. So just this business alone would be a very valuable business. But obviously investors are very excited about the body camera and related cloud services that Axon is selling. Another thing that has really changed over the last few years is Axon leaning into bundling their products together and then selling those through subscriptions. So the bundle, what they do is they say, hey, for each officer, we're going to give you a body camera and a taser. Some include other components, but those would be the two main components. And then we're going to also layer on cloud services so that the data that's collected can go into the cloud and be analyzed there. And those are just sold as a monthly fee. And then hardware is updated over time. You get a new taser, get a new body camera. And this has become a massive business for Axon. Annual recurring revenue for subscriptions is now $619 million and total backlog $5.8 billion. So just look at these two numbers and you can see that a lot of the contracts that Axon is signing are 10-year contracts. I think 5 or 10 years ago, that would be shocking to know that customers are signing a 10-year contract with Axon. Net revenue retention is another metric we often look at with SaaS companies. And what that's telling you is how much is revenue growing at existing customers. And so revenues are growing at about 22% per year at existing customers. They're adding on services or seats. And so that's what this is measuring. So you want to see this growing because this is organic growth. They did update guidance a little bit, not big changes, but they're expecting 30% annual growth to about $1.55 billion in revenue. Adjusted EBITDA margin, which is going to be a proxy for cash flow, expected to be about 28%. So that's going to be up slightly from previous guidance. And then they do have a lot of stock-based compensation at $130 to $140 million. So things are moving in the right direction, but not huge changes. And that's probably a reason that the stock didn't move a lot after earnings were announced. I want to put some of these numbers into context because Axon, as big as it is still relatively early in addressing its full market potential. Now, this is the way that Axon presents this, is that they have a $50 billion total addressable market. The two on the left are SaaS, total addressable markets, digital evidence management, and then real-time operations. So these are going to be services that they sell to law enforcement agencies, the cloud services, the first responder, even live streaming that you can do. So that fits in this bucket. The next is hardware, camera hardware specifically. $9.7 billion a year is what they see this as the market. Axon Air is their drone. And then VR and AR training is something that they're trying to grow into, providing training for their devices and for law enforcement in an AR and VR environment. I don't think we've seen a lot of momentum with that, but a potential growth vector. Tasers, pretty mature market for Axon right now, but an area where they see a lot of potential growth. And given the fact that it's still growing at double digits, I think that definitely could be the case. And this was new fairly recently, personal protection. Axon is trying to take the devices that it's making today and turn those into personal protection devices. You can get tasers for personal protection. I would be surprised if we don't see Axon eventually move into home monitoring as well. So something that could actually tie straight into law enforcement agencies. If somebody, for example, breaks into your home, law enforcement could actually have a live video of that. I think that is a natural fit, but not something that they're pushing into quite yet. But here's where I think you see visually where geographic expansion is really going to be the biggest opportunity for Axon. If you are in the US, tasers and body cameras are relatively common. 35% market penetration is actually a relatively high number. Body cameras, same thing, 14%, and fleet cameras, 7%. So there's a lot of room to grow there, but we're not talking about 10x growth that they're going to have in the US, because you're never going to get to quite 100% market penetration. Same thing with these Commonwealth areas. So Canada, the UK, Australia, pretty high penetration, especially in body cameras, but there's almost no penetration for Axon in Europe, Latin America, or Asia. So a huge percentage of the world's population and economies just don't have much exposure to Axon's products. And I think that's ultimately where we're going to see a lot of growth. Maybe we see this net retention rate, so the money that they're extracting from the US and the Commonwealth countries, that could maybe increase a little bit over time. But if Axon's going to double revenue every couple of years like they've been doing, it's going to be because they grow into these new markets. Now, as great as Axon's business has been, it is worth noting that this is a very expensive stock, a very expensive company. As I'm recording, market cap is $16.7 billion. Price to earnings multiple on a trailing basis is 166. On a next 12-month basis is 60. So very, very expensive on a price to earnings multiple. Now, we are seeing margins go up and profits go up. Axon was not focused on profitability for a very long time. So that is starting to turn, but still very expensive. Enterprise value to EBITDA on a next 12-month basis is 45. Enterprise value to sales, even on a next 12-month basis, is 9. So you're paying a huge premium for this company. Now, Axon has shown that they deserve a premium, but it's worth noting and keeping in your investment thesis that this is not a cheap stock. I actually sold a small portion of shares earlier this year because it was such an expensive company. I didn't want to take that financial risk that they would maybe under execute those expectations. Now, that does not appear to be what we have seen from third quarter results. In fact, Axon keeps raising those expectations. So that's why the stock keeps moving higher. But just wanted to note that valuation is absolutely something to think about with this stock. Now, operationally, completely different story. The company is doing extremely well. The move to subscriptions has been phenomenal. Margins continue to improve, and that net retention rate is exactly what you want to see for a company that's leaning into SaaS. So I think a lot to like operationally. The only question for investors is going to be valuation. Is the stock simply too expensive? So love to hear your thoughts about that in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.